Opendoor investors finally got the news they've been waiting for. We got a new CEO announcement that came out on Wednesday, sending the stock surging over 30% in after hours. We're going to break down that story, including some of the other details related to it. And we'll also break down some of the latest short positions that are now feeling a bit of pressure. We'll also tackle some of the latest macro news, including Microsoft inking a deal with Nebius, sending that stock soaring. We'll also tackle the historic day on Wall Street that Oracle had, and much more on this week's Midweek Check-In. As always, if you get value from these videos and you want to support the channel, make sure to like, subscribe, share with a buddy. Don't forget to follow us wherever you listen to podcasts. And now, folks, as always, let's roll. I'm Brandon. Welcome back to Stonkcast, the market show for the average Joe. Whether you're a diamond-handed degenerate or a more conservative swing trader or investor, we've got you covered. If you want to support the channel, make sure to check the links in the description. All right, folks, we finally got the CEO news we've been waiting for. It's been almost a whole month since Carrie Wheeler stepped down. We've had all the cryptic messages from Keith Rabois and Eric Jackson, all the speculation about who the new CEO is going to be. And we finally found out on Wednesday who it is. Let's take a look at this article from CNBC. Opendoor taps new CEO and names Keith Rabois chairman, boosting stock 30%. Opendoor, the online real estate platform that's seen a surge of retail investor interest in recent months, said Wednesday that it's tapped former Shopify executive Kaz Nejatian as CEO and named co-founder Keith Rabois as chairman. The stock popped 30% in extended trading and is now up more than 15-fold since hitting its record low in June. Rabois, a partner at Coleslaw Ventures, helped launch Opendoor in 2014, along with a group that included Eric Wu, who served as the first CEO before stepping down in 2023. Wu is rejoining the board as part of Wednesday's announcement. The moves come after Carrie Wheeler last month resigned as Opendoor CEO following an intense pressure campaign from investors. Rabois and hedge fund manager Eric Jackson were among those who were vocal critics of Wheeler and called for her departure. The company was at risk of being delisted from the NASDAQ in May due to its stock price being below $1. Weeks later, Opendoor attracted a surge in interest from retail investors, earning it, quote, meme stock status after Jackson began touting the company. With the after-hours pop, Opendoor now has a market cap of close to $6 billion, up from less than $400 million less than 3 months ago. And here's the interesting part. Nejatian spent 6 years at Shopify and oversaw the Canadian e-commerce company's product division in addition to serving as its COO. Nejatian's last day at Shopify will be September 12th, and the company's executive team will assume Kaz's responsibilities, Shopify said in a regulatory filing. Literally, there was only one choice for the job, Kaz. Rabois said in a statement, I am thrilled that he will be serving as CEO of Opendoor. So this is massive, massive news. There was a lot of directions the board could have gone as it related to filling in the CEO role for Opendoor, right? There was a lot of hesitancy that the board was not going to be aggressive enough from Eric Jackson, Keith Rabois. They have been making calls for the board to be aggressive, and I feel like they did exactly that. They hit the nail on the head, so to speak, bringing in somebody who has a track record with AI, with scaling up companies. Shopify is a very, very successful e-commerce platform, and the fact that they were able to land the chief operating officer for Shopify, bring him on board as the CEO for Opendoor, just shows you what direction the board is taking Opendoor. This is massive news. Not to mention the fact that you also have Keith Rabois and Eric Wu coming back on board. These were original co-founders of Opendoor. The fact that you got Wu and Rabois coming onto the board and you're going to have Rabois be the chairman of the board is also massive news and goes to show you what direction this company is headed. And also, not to mention the fact that Coleslaw Ventures, which Keith Rabois is a part of, is making a $400 million investment into Opendoor. So really, you have a trifecta going on here, a new CEO, you got original co-founders coming back on board, You also have an investment from Coleslaw Ventures. This is all excellent, excellent news. And if we just take a look at how the chart reacted in after hours on Wednesday, it just goes to show you what the market made of this decision right here. I mean, if we just talk about intraday on Wednesday, we did tap 571, but as soon as that news came out, the stock soared over 30%. It went as high as $8.59, clearly setting a new 3-year high, and closed out around $8.12. So a massive, massive move up in after hours, and just goes to show you what kind of confidence the market, what kind of confidence investors are putting into this new CEO announcement from Opendoor. The market clearly likes it. This is awesome, awesome news for the bulls, and portfolios in the morning, especially on the option side, are going to be looking very, very juicy indeed. So that's what we got as far as the CEO announcement. Now let's move on to some of the individuals that may not be feeling as good about the CEO announcement. First of all, here's an interesting one. Martin Shkreli doubles down on Opendoor short. Call Pharma Bro draws parallels with Newegg game over loser. So former hedge fund manager and pharmaceutical executive Martin Shkreli doubled down on his bearish stance against Opendoor Technologies, drawing parallels with another retail favorite stock that has since witnessed a pullback. Open stock is struggling to find support. OpenAI is an obvious short, Open is an obvious short, Martin Shkreli said on Monday in a post on X. Shkreli calling iBuying platform Opendoor an obvious short, adding that anyone who is long on it should never invest again. So I think Martin's going to be eating his words after that post on Monday. And then you also got this one here. Citron Research posts on X. Citron will continue to update the market on LDI and its March higher. But in the meantime, let's go back to the roots. Unlike LDI, which is undervalued and offers many ways to win, Open is nothing more than a stock promo and a science project in how to burn money. So you got Shkreli, you got Citron Research. They were both publicly taking short positions against Opendoor. And as this meme points out here, which I just absolutely love, those shorts are not looking too great after the Wednesday CEO announcement. A 3-year high does not seem like a good spot to be in if you are short. Also, we haven't gotten Drake yet. Eric Jackson hasn't gotten Drake to invest in Opendoor yet. However, we did get Rob Schneider, a pretty famous comedian, investing. This was an interesting post on X. You had Eric Jackson saying, not Drake, but we have a significant comedian buying Open announcement coming tomorrow. This was a couple days ago. And then Rob Schneider tweeting back, shh, let me buy it first. So great to see that the movement continues to build. The quote unquote Open army continues to build. And we're getting some more public figures involved in Opendoor. And also what's interesting, I did see some posts floating around. There is a nameless account on X that Anthony Pompliano and Eric Jackson both are covering that allegedly has roughly about a $30 million investment in Opendoor. And this account is talking about upping it to $100 million. So I don't think it's just a one-off account. If you have Eric Jackson, Anthony Pompliano following it, we don't know who it is, but there's clearly some whale action going on in Opendoor. So very interesting stuff. And let's just kind of break down the chart, right? Let's kind of see where we've been at for this week as we get ready to, kind of close out the week. We got a couple days left here. And let's just take a look at some of our levels prior to the CEO announcement here. So we've been having this uptrend over the past 2-3 weeks, which has been great. We've been experiencing higher lows and higher highs, and we did hit a new 52-week high and 3-year high on Monday of earlier this week of 732 before we had a pullback. And on Wednesday, we had a pullback to the 23% retracement level. The RSI got a nice reset to 66 after being up near 76 at the beginning of the week. So we had a bit of a pullback in Opendoor that we experienced on Wednesday during regular hours. And then, of course, if we just take a look again at what happened in after hours, we got that massive spike up due to the fact that we got the CEO announcement, right? So that's where we're sitting right now. The RSI is obviously going to get adjusted once the market opens. It could very well peak back above 70. I would imagine it would with a 30% after hours move. But this is a catalyst, right? So, we want to look at things like RSI to get an idea of where stock is going to be overbought, oversold. But what an RSI isn't going to take into account are news catalysts. And that's exactly what Opendoor got Wednesday and after hours with the CEO announcement. And it really puts us in a position now where we are going to be toying around potentially with the $10 price level. If we zoom out to a weekly chart over the past 10 years, and we just take a look at Opendoor really on the grand scale, really since, 2020 when it was traded publicly, you can see here I have some clear levels lined out for, on a larger time frame, right? If we begin to entertain those, which we now most certainly will be doing, the first level I'm looking at is just a hair below the psychological level of $10, which is $9.65. This would be the 23% Fibonacci retracement level for really just all the data we have from the all-time high to the all-time low, right? So that's going to be the first level that we're going to look to break past, and we are definitely in a position now where we could very well do that. So let's do a quick check-in on the options chain for Opendoor. Now, of course, this was all prior to the CEO announcement that we got, but if we just take a look at some of the action we got on Wednesday, which was technically a 4% red day during regular trading hours, we still had a put to call ratio 0.39, pretty bullish there. You had just over 500,000 calls transacted versus 213,000 puts. You have the current IV percentile sitting at 35%, very attractive for premium buyers, an implied volatility of 161. So yes, it is a bit elevated, but when you look at the IV percentile, it looks pretty decent right now. So the options chain looked bullish on Wednesday despite a red day. And that's something I've talked about on the show before, is the fact that even on red days, the options chain for Opendoor is bullish, and that is justified after the move that we saw today. So Opendoor looking incredible. Let's see what the rest of the week holds. If we can get a run at $10, that very well could happen. So that's definitely something I'm going to be paying attention to see if we can break that and see if we can squeeze some shorts. Also got to keep in mind the fact that a lot of the open interest for Opendoor, if we take a look at the next monthly expiration, which is September, I mean, you have a ton of open interest happening at the $9 level, a ton sitting at the $7 strike. I mean, you got 50,000 contracts here, 36,000 sitting at $6. You got 33,000 at the $9. I mean, these are all contracts running in the money. Deltas are going to go up, obviously, and you're going to have market makers hedging. So we could be setting up for really a trifecta of short squeeze, gamma squeeze, and just momentum buying based off of the news catalyst we got on Wednesday. So very, very interesting stuff there. All right, let's do a quick review of the major indices. First of all, take a look at this piece from CNBC. S&P 500 closes at record for second day on inflation data. Oracle stock surge. So taking a look at the S&P 500, we did close Wednesday at 65.32, and we did notch a new all-time high on the S&P. We talked about on the previous episode how, we hit a new all-time high at that point in time, but it was a red day, and we did manage to tap the 20-day moving average, but then got bought right back up. And so it's great to see yet again a new all-time high being set on the S&P. Let's do a quick check-in on the NASDAQ. And if we take a look at the Qs, we are currently sitting at 583 on that. Also a new all-time high for the Qs, which makes sense with a lot of the AI news that we've gotten so far this week. Quick check-in on IWM. IWM on Wednesday actually finished about flat, down just about 0.2%, sitting at 236. Quick check-in on the VIX. The VIX still looking pretty good if you're long on the market. Currently sitting at 15, And let's do a quick check-in on Bitcoin at time of recording. We are currently sitting up basically, well, not really anything. At time of recording, we're about flat on Bitcoin, currently sitting at 114,000 on that. But on the daily chart, looks like we did manage to find support right around 110,000. So great to see there. And we'll see if we can make another crack at the all-time high, which is right around 124,000 on Bitcoin. All right. So now let's move on to some macro news. So first of all, I'm going to take a look at this piece here from Investor Business Daily. NVIDIA-backed Nebius skyrockets on AI cloud computing deal with Microsoft. So the Amsterdam-based company will provide AI computing power to the Dow Jones tech giant via a New Jersey data center, Nebius disclosed Monday night. The deal, which runs through 2031, is worth $7.4 billion to $19.4 billion. Nebius stock vaulted 49% Tuesday, hitting a record high after pulling back in the past 3 weeks. Microsoft stock edged up 21 cents. Nebius uses NVIDIA chips to power its data centers. NVIDIA is also a notable Nebius backer. NVIDIA stock rose 1.5% on Tuesday, still below its 50-day line. So this was a massive deal between Nebius and Microsoft that came out this week. And if we just take a look at the chart for Nebius, just to see what it looked like on the daily, as you can tell here for those on YouTube, this was a massive, massive move up. Prior to the announcement, it was trading right around $64 and had to move all the way up to $100. Now, as far as the daily chart after this massive gap up, it doesn't look the greatest after Wednesday's close. This is not, the most bullish looking candle here. And now, obviously, you do have this gap all the way down to 76. I would imagine eventually that'll get filled. But in either case, this is a huge, huge deal for Nebius with Microsoft. And basically what they're going to do is they're going to use their infrastructure to be the AI host for Microsoft. As we continue to see a lot of these hyperscalers like Microsoft, basically looking for smaller companies like Nebius to handle all the AI infrastructure and handle all the housing for them. That way they don't have to go out and basically, buy it themselves. Obviously, the cost of AI when it comes to energy and the infrastructure is very expensive. So if they can get a smaller company to do it instead of them building out their own data center, in Microsoft's case, that is way more cost efficient for Microsoft. And that's part of the reason why we saw this deal go through. So very, very interesting. And I would expect more things to come as far as news and deals for Nebius now that they have inked this deal with Microsoft. Obviously, Microsoft, a massive, massive company in the Magnificent Seven. So this gives Nebius a ton of credibility. All right, let's move on to Oracle, which also has been having a pretty massive week. They did announce earnings and they smashed earnings. Take a look at this article from the Wall Street Journal. Oracle, OpenAI signed massive $300 billion cloud computing deal. The majority of new revenue revealed by Oracle will come from OpenAI, deal sources say. So OpenAI signed a contract to purchase $300 billion in computing power over roughly 5 years from Oracle. People familiar with the matter said a massive commitment that far outstrips the startup's current revenue. The deal is one of the largest cloud contracts ever signed, reflecting how spending on AI data centers is hitting new highs despite mounting concerns over a potential bubble. It will require 4.5 gigawatts of capacity, roughly comparable to the power produced by more than 2 Hoover dams or the amount consumed by about 4 million homes. Oracle shares initially surged by 42% on Wednesday after the cloud company revealed it added $317 billion in future contract revenue during its latest quarter that ended in August 31st. Chief Executive Zafra Katz told analysts that it had signed contracts with 3 different customers during the quarter. So this is massive, massive news for anyone involved in Oracle. As an investor, you are sitting pretty. And you also have this piece from MarketWatch. Oracle stock just did something never before seen on Wall Street. Inside that historic move, no company worth over $500 billion has ever gained more than 25% in a single day. Oracle stock increased by far more than that on Wednesday. Just an incredible move that we saw on Wednesday from Oracle, up over 30%, which is an insane move. For a company this large. The company finished the day with a $946 billion market cap, up from $686 billion at Tuesday's close. Based on the updated share count in Oracle's latest 10Q filing, the $247 billion daily gain in market cap was the seventh largest on record for any company, according to Dow Jones market data. So you have a lot of companies in the AI space that are making massive deals, and investors are basically paying them accordingly. So if we take a look at the daily chart right now for Oracle, obviously we have a gap up here as well after the massive day it had. And just take a look at the volume on this thing. For those on YouTube, relative to what we normally see as far as volume, I mean, this thing had a relative volume over 8 times what it normally does on Wednesday. Just a massive move up. Obviously, the market was not anticipating just the sheer amount of future revenue that Oracle's going to generate. And we got an idea of what that's going to look like from Sam Altman's OpenAI company and the deal that they inked with Oracle. And so obviously, when the market gets a surprise positively that it wasn't, pricing in, you get insane moves like this. But for a company this large, this is still just an insane move. And I think I read somewhere that Oracle's chairman is now richer than Elon Musk, which is just insane in and of itself. So as of right now, you got Oracle closed out Wednesday at 328. Again, up over 35%. Obviously, the RSI on the daily chart is pretty overbought given the move that we saw. It's currently sitting at 83. I would expect a bit of a cool off there. But I mean, the future looks bright for companies like Oracle. And, for the long haul, I don't really see a reason why this thing is going to go anywhere but up. So very interesting. I mean, if you just take a look at where Oracle was at, back in 2016, it was $33. And just look at, if you have been invested in this thing the whole time, look at how crazy this thing has moved. Now at 345. And I would expect more good things to come for Oracle. So pretty intense day for the bears if you're in Oracle, getting your face ripped off there. But again, a pretty historic day on Wall Street for Oracle. All right. And speaking of wild moves, we got this article from Yahoo Finance. Dan Ives backed Eightco sees stock explode nearly 3,000% after unveiling WorldCoin treasury strategy. So Eightco Holdings, ticker symbol OCTO, stock surged nearly 3,000% on Monday. That's right, you heard that right, 3,000%, after the company announced plans to pursue a WorldCoin treasury strategy, making it the latest public company to flip its balance sheet into a warehouse for digital currencies. The company said Monday it would sell $250 million worth of stock in a private placement transaction to buy a WorldCoin tokens. WorldCoin is the token of the World Network, which was co-founded by Sam Altman, CEO of OpenAI. As part of its transaction, Eightco also named tech analyst Dan Ives as its board chair. Ives has become one of the most prominent tech analysts on the street during the AI boom, known in particular for his bullishness around NVIDIA and Tesla, among other tech giants. Ives, an analyst with investment firm Wedbush, also launched an ETF the day in Ives' Wedbush AI Revolution ETF, ticker symbol IVES, earlier this year. So Eightco is following the digital asset treasury strategy pioneered by Michael Saylor's strategy, which has for years purchased Bitcoin to hold on its balance sheet. Eightco said in its press release that it may also use the proceeds from its sale to buy Bitcoin and Ethereum. Now, the crazy part about Eightco is just the sheer movement that we saw on this thing earlier this week. It basically went from pennies to over $70. And if we just pull up the chart just to see what it looked like, it was a massive move. Taking a look here at a 5-day, 2-hour chart, look at this insane run up that we had earlier in the week. And, part of the thing that fueled this beyond the news, that we had with Eightco and bringing Dan Ives on board, that's very, very bullish. He is one of the most prominent bulls on Wall Street. Beyond that, you have to keep in mind that the market cap for Eightco prior to Monday, before they had the private placement, was very small. It was a couple million. Not to mention the float, the amount of shares available to trade, was also very low. It was a couple million. So you had a recipe for a pretty intense, violent move if you got the right news catalyst, and it definitely got that. This thing was as low on Monday, I believe right around $1.66 in pre-market, and skyrocketed intraday all the way up to $83. Just to put that in context for you, if you would have dropped about $15,000 in this thing in the pre-market on Monday, at the peak, you would have turned that into well over $500,000. Again, insane move, over 3,000% intraday, pretty crazy. And obviously, since that run up, now we're kind of see some profit taking, and it makes sense after that massive move. We'll see if it can find some support. But the fact that it's getting involved with WorldCoin, there's a lot of people speculating that there isn't really much to WorldCoin. So we'll see how it goes for Eightco. It is technically not a penny stock right now. It was prior to the run up on Monday, but I would still be a bit hesitant to get involved in it, especially at this stage. So just a very interesting story. All right, let's move on to the economic calendar. So far this week, we have had some news that has been bullish in the way of getting a Fed rate cut pretty much locked in for next week. So first of all, on Wednesday, we did get PPI data that came in very, very soft. We had a forecast of 0.3%, and it actually came in at negative 0.1%. So from a producer standpoint, inflation has been under control, which is great to see. Talked about in the last episode that, hey, the job market looks weak. The Fed needs to see inflation be under control to feel confident that they can safely begin to cut rates and basically take the process of quantitative easing into effect. And they basically got that confirmation on Wednesday with the PPI data that came out. Now, on Thursday, 8:30 a.m. Eastern, we are going to get CPI. So we've seen the producer side as it relates to inflation. Now we need to see the consumer side. And if that stays in check as well, that's going to be a bullish signal for the market as we essentially price in a 25 basis point cut, a very, very small chance of a 50 basis point cut happening. But in either case, we're getting a rate cut next week on September 19th, Wednesday, I believe. So we're going to get CPI in the morning, and then we're also going to get initial jobless claims as well. Now, as far as the forecast and what we're looking at, right? So for core CPI month over month, the previous was 0.3%. We're forecasting 0.3%. If we take a look at initial jobless claims, the previous number is 237,000. The forecast is 235,000. So we're expecting initial jobless claims to not be as crazy as the previous number. So if that comes in high and CPI stays in check, that's just going to be more fuel to the fire for the odds of a rate cut. You're also going to get a 30-year bond auction happening on Thursday at 1 p.m. And taking a look at the CME Group website, as I was referencing a little bit ago, the odds of a 25 basis point cut happening next week right now, 92%. You got an 8% chance of a 50 basis point cut. And if we take a look at basically the probabilities in October, you got about a 72% chance of getting down into the 3.75 to 4.00 Fed fund rate range. And, basically at this point, what we're looking at are 75 bips getting cut from the Fed fund rate by the end of the year. We do not have a Fed decision in November. So really it's just September, October, and December that we are looking at, unless something crazy happens and we need a 50 basis point cut in the middle of the month. I'd say at this point, there's a pretty good likelihood that we're going to be down 75 basis points by the time we hit 2026. So that is great news for companies like Opendoor and really just the real estate market in general, as we see refinancing starting to happen as the real estate market thaws and we get mortgage rates starting to come off a little bit. That's great news for companies like Opendoor, especially now with their new CEO. The future looks very good there. Let's take a look at this earnings calendar for the week of September 8th. Obviously, we had Oracle earnings that, blew it out of the park on Tuesday. You also had GameStop, which reported earnings. Those were good earnings as well. Speaking of companies that like to keep crypto on their balance sheet, GameStop's another one there. And on Thursday, before the bell, you're going to have Kroger's. And then after the bell, you get Restoration Hardware and Adobe. That's about it, really, for earnings. And not a whole lot going on for earnings next week. Really, about all you got there is FedEx and Lennar. When you talk about real estate, taking a look at what Lennar does on Thursday, September 18th, that could be interesting. So that's what we got for this jam-packed midweek check-in. As of right now, it really seems like Opendoor is positioned very, very well with the CEO announcement. Very interested to see what this new board structure with Keith Rabeau looks like and what their plans are really as they look to embrace AI. One of the things that I want to bring up, speaking of AI, is some of the other investments that Eric Jackson is currently involved in. We're going to cover some of those on the market prep episode, so make sure to check that out. That'll be dropping Sunday, 7 p.m. Eastern. Opendoor is just one of his many 100-bagger ideas, as he likes to call it. And so really what we're going to do is a look into some of the other companies that are basically building out AI database infrastructure for the hyperscalers. And we're going to take a look during this AI boom that we're in right now, not necessarily at the big names, right? Like Microsoft, NVIDIA, Oracle, but we're going to look at some of the smaller companies that can provide some of the energy needed for the AI computing servicing side of things. So that's going to be very interesting. Make sure to check that out for some different trade investment ideas potentially. And we will also cover any more macro news that comes up between now and Sunday. Definitely appreciate all the support. Make sure to drop a comment. Let me know what you think of Oracle's historic day. Let me know what you think about Opendoor and the new CEO. If it's bullish, bearish, indifferent. As of right now, it seems very, very bullish for Opendoor. Would love to get your take. Definitely appreciate all the support we get on this channel. Make sure to check out our shop for any merch. Make sure to follow us, drop a comment, follow us wherever you listen to podcasts. And folks, as always, remember, plan the trade and trade the plan. Have a good one.